Hey YouTube family, it's Dinko the Realtor, your Utah Realtor. When is the right time to buy in 2024? Well, you know this is a no BS YouTube channel. I'm going to give you the data, information, and analysis you're not going to be able to find anywhere else. What would be the first thing, the number one thing that would have to happen in order for the market to show that it is actually pivoting and that prices are going to sustainably start going up and that it's going to become a seller's market again? Well, that would be mortgage applications. And well, let's read this. The recent decline in rates has given housing markets some cause for optimism going into 2024. But purchase applications have not yet picked up in response, with the overall level of purchase activity down 12% lower than a year ago. So the first step, mortgage applications are down than they were a year ago. And remember, we're comparing this to a bad time of last year, right? Because last year, same time when we compared 2023 to 2022, it was down 20%. So really, we are down 30% from the mortgage applications of 2022. So that's not indicating that the market is going to start shooting up, right? So what would be the second thing that would have to happen? And that's going to be under contracts. Well, let's take a look at what's going on with under contracts here. So I'm going to show you what's going to happen here in the market, when prices are going to go up, when prices are going to come down, and I'm going to show you at the end. If you stay here long enough, I'm going to give you what I think is going to happen as far as the recession. Now, let me go over here to the under contract. So this is 2024, as we can see. And let me just zoom that in a little. So that's 2024. There we go. So 2024 and 2023 over here, right? So we have 3,200 under contract compared to a year ago of 3,676. So we have less under contracts and less mortgage applications, meaning less new buyers entering the housing market and less buyers that are in the housing market right now under contract. So that is not indicating that the prices are just going to start shooting up, right? We would need to see mortgage applications coming in higher year over year to say, hey, okay, maybe the market really is pivoting and maybe prices are going to continue just going up now forever, right? So number one, mortgage applications. Number two, the under contracts. Now, if we take a look here, if I go over here, and I take a look at what's going on in 2023 compared to 2022. Well, look at this. There was 3,676 under contract, right? And 6,400 in January, on January 10th of 2022. Now, the first half of 2022 was really, especially those first 3 months were crazier than in 2021. And the market peaked in May of 2022 at $600,000. Then prices started dropping for 9 consecutive months and fell down to $510,000. Then we saw a rebound in the spring, and that rebound reached up to $550,000. And then now we saw that price has come back down to about $525,000 to $530,000. So it's showing that the market is not just completely going up all the time. And I'm going to show you how to time the market here depending on what your ultimate goal is. So we see that the under contracts would have to be substantially higher, like they were in January of 2022, for the market to just start skyrocketing up. Now, if we compare 2019, right, to 2018, we had 4,400, and well, I guess I should not have done that. Let's see, there we go. So 4,400 on January 1st of 2019, 4,800 under contract on January 1st of 2018. And if we go back over here, look at 2023 and look at 2024. That's why I've kept saying that the housing market has not stabilized. And yet inventory levels are not, I've been saying this in previous videos, and I've been saying this for a year now. Well, yeah, pretty much for all of 2023. Our inventory levels, when we're comparing, are actually just as high as they were in 2019. So when they talk about the pre-pandemic shortage of inventory, that is not true. We have the same amount of actives. Now, new construction market share is much higher at that percentage. So if interest rates come down, there are a lot of sellers that are going to also sell, because now they're going to say, hey, I can get rid of my 3% interest rate and maybe I'll substitute it for a 4 or 4.5 interest rate, and I'm going to get that bigger house now that I have extra kids or whatever's going on, or hey, that I'm going to downsize. Now it makes sense. Now that downsize monthly payment is going to be lower than it is with my big house, or that monthly payment when I get that bigger house is not going to be that much more expensive like it was with 7 or 8% interest rates. So we see here that we are lower than 20 2019 and 2018 as far as under contracts. Now, I want to show y'all what's going on with solds, right? And I've been going over this stuff. So if we take a look here, look at 2023 and 2022 to the left, right? Negative 29%, 15%, 19, 26, 11, 20. There was only October was the only positive month that we had when we compared 2023 to 2022 in solds. So it was the only month where we had slightly more sales than a year ago. And that was on October of 2023 versus October of 2022. Everything else was negative in sales. And if we go down here and we compare that to 2019 and 2021, we see that we are 35 to 45% negative. So the sales are not indicating that things have stabilized fully, right? Now, let's analyze what's going on over here. So let me show y'all this here. And then I'm going to show you how to time the market depending on short-term, long-term goals, where you want to be. And I will give you what I think is going to happen as far as the recession. Now, right here, if we take a look and analyze this, this is going to be, let me zoom out here so you can see that and move myself off of there. There we go. So this is 2019, and this is sold data right here. This is going to have your townhomes, single family, and your condos. So if we take a look here, every single year in a normal market, the housing market starts selling more, as the new year begins. It goes up towards the second quarter, and then it peaks in the third quarter, which is right when school year starts. So it goes up substantially, right, from the first quarter to the second quarter, which is spring, and then a little bit more during the summer. And then it starts coming down as kids go back to school, and then it goes down even further as we're approaching the holidays. And we see that trend continuing, right? Now look at the solds when we're looking at 2020, right? It starts the year off normally, but then after the lockdowns, right, because May, people were starting to get to work from home and they started buying those houses. And I'm going to show you what happened there. So right here, we see that that's towards the second end and into the summer. We see these sales are much actually higher in 2020, and then they start coming down. And then the sales go up here in 2021. They start coming down. But look at what's going on here where we're at currently. Look how much lower our peak was in 2023 compared to even the normal year of 2019. And look at the peak month right here in the second quarter. Also, the markets now are peaking in the second quarter. So they're peaking in the spring versus the summer in the last 2 years. And then they're going down. The sales are going down for 2 straight months, which is actually also in line with what's going on with prices, right? The prices, they upticked in the springtime, and then they kind of stabilized in the summer of 2023, and then they started coming downwards. Same thing in 2022, except it started happening a little bit sooner. The prices peaked at the end of spring, then they started coming down in the summer and into the fall, towards the holiday season. So we see that the sales are not rebounding. Now, what's going on with prices? And this is where I'm going to show you how to time what's going on, depending on what you're trying to kind of time and figure out, and whatever your timeline is. And look, I'm negotiating even right now for people, even houses that barely come to the market. I'm actually even negotiating those down for my buyers. If you're willing to, lose that house, then we can negotiate, and we can even on a house that just hits the market that is desirable, we can even knock the price down off of those somewhat. And of course, the faster the house sells, the higher it sells for an amount. So the houses that are really nice, that are desirable, those do still move quickly. And there is an occasional multiple offer situation if the house is move-in ready and very desirable. So right here, see how the market was just peaking, right? I mean, it was just going up. This is what happens every time at the beginning. It starts going up. And then look at 2020, right? Look how much the prices went up. But then look at the peak from 2021 right here at the start. I mean, look at this peak. Look at this from 515, 553 to 590, right? So this is actually 2020 the first half of 2022. Same thing here in 2021, right? Look at this peak here. It wasn't as big, but that's also because of the under contracts. And I'm going to show y'all here what's going on with that. But that's how the market peaked. Then the market came down. So we see it came down from 590 all the way to 525. And actually it was 510. So sometimes this thing goes towards the quarters, and January is the first month of 2023. So it's not going to be part of this statistic. And also we peaked at 599,000, like 60, so 600,000. So these numbers are not going to be exactly at the peaks and the bottoms, because this is going for the quarter, right? And the quarter ends in June. It does not end in May. So that's why it's 590. And we see it coming down here for the second half. And then this is the uptick. So this right here is the spring uptick that I was talking about in 2023. Then the prices kind of stabilized during the summer, and then they started falling. And right now we're about $525,000 to $530,000. So we see that that trend is holding true, where the prices start peaking into the summer and then they start falling for the second half. We see that in 2023 they did not fall as much and for as long as they did in 2022. Now, if we analyze that, if you're wanting to buy in the short run, you probably would want to start going into the market right now. Because if we take a look at this, if we compare it to last year, right? So right here is where the market was in the first month. So we see that in that first quarter, so January, February, March, right, the market was stabilizing. So it dropped, it dipped. So anything that went under contract in December, that's what closed in January, and that was the bottom. But then February started going up, meaning that things that went under contract in January slowly started going up in price. And we see that here. So if you're going to buy right now, there's a lot you can take advantage of, and we see that the mortgage applications are down, less buyers, less competition, and we don't know what the spring is going to bring, right? But I'm going to give you my, opinion of what can happen with the recession, and if you're into this for the long-term wait. Now, right here, let me pull this one up. So if we take a look at actives, right, we see how much more actives there are. And if we take a look at December, so I want to show you all this. This is how you can mimic, or well, how you would know if the market is mimicking where prices are going to skyrocket up. So right here on December of 2020, there was 2,919 homes for sale. Well, now in the first half of 2021, that's when prices just skyrocketed, because there was only 2,900 available homes at the end of December. And we see that that was true in December of 2021. And this is where I started telling my buyers and sellers, hey, I think that the first half of 2022 is going to be just as crazy, if not crazier, than it was in 2021. Because I'm like, hey, if we're comparing it, inventory just started coming down. It wasn't trending upwards like it was for 2021. And now it's actually lower than it was a year ago. And then we did see that. But look at 2022, 8,792. Did we see that explosion? We did not. Now, if we go to 2023, 8,419. Are we seeing that explosion right now? Multiple offers the first week of January? We are not. So mimicking the market, we can see that. Now, as far as the recession, as far as what are you trying to do? If you're trying to buy, right now, it seems if we don't see a recession, if interest rates do come down, and if unemployment stays steady here for the next few months, prices are most likely going to uptick. Now, the car market, this is something that I've covered in the past. The car market resembles the 08-09 subprime mortgages, the car loans do. So that has not stabilized. And if that does pop, the car bubble, there's more repos out there than any time in 08-09, prior to 08-09. And there's more people delinquent on their car loans. And now student loans haven't even resumed yet. So we know that's going to impact the economy if that ever does resume, right? And, the question is, we hit $34 trillion now officially, and we see that the amount of money that the US government is printing. So are they going to be able to continue to sustain that, to sustain this low unemployment rate? Well, the US government got downgraded, so I'm leaning towards a recession. Now, the thing is, money is fake. They can just drop it. They can drop interest rates and kind of flood the market. So I can't say that the recession is going to be 08-09. If they're not able to print those, that amount of money because their credit got downgraded, then we definitely could see something, a little bit more severe, and who knows how much more severe. I will actually link a video. It's going to pop up somewhere here. It's my first video that I posted. I said that the housing market would see a correction of 10 to 30%. And if everything goes to crap, then we could see something where prices could drop 50%. And that would be Armageddon, right? So I'm not going to put that one up here, but you can search for that one. But I'm going to put the one from 10 to 30%. And we're already at that 10 to 15. And I dropped this video. It took me like 5 or 6 weeks to record that first video. And I dropped it, I think, at the end of June of 2022. So really, I was given that information for the first half of 2022. And I said it was going to be 10 to 30%. And we're seeing that 10 to 15 right now. So I do believe that that recession, when it comes, we probably will see somewhere about another 5 to 15 and maybe even 20%, depending how bad that recession is. Now, depending how much money they're able to print into the economy, maybe that is only going to mean another 5 or 6 or 7% where prices come down. And if it's a pretty severe recession, so it's really that wait game of, if you want to buy right now, we can do that. I can help you take advantage, get you the best deal that there currently is. If you want to be in that long-term wait, it could be 6 months, it could be 12 months, it could be, that full year, it could be even more than a year, because we don't know what's going to happen as far as this recession. And I'm going to keep these videos coming. So if you haven't yet, subscribe, leave a comment what you think is going to happen in the housing market. And again, these videos are going to keep coming. I'm going to keep you informed. I want you to have the financial information that you need to make a financial decision that you feel comfortable with.